It's Michael Shadroff from Alex Brown. Again, the purpose of Shadi's Influencer Spotlight is to bring in various people from my network to talk to the business owner clients and executives that I have. And today we've got Jordan Lamm with us. Jordan is somebody I met. He's been part of my network for about a year. And we're both in a provisors group together, a local group called Chicago 4. So, Jordan, why don't you give a little bit about your background and talk about where you're at now and how you got into valuation work?
Sure. Well, first of all, Michael, thank you for having me here today. I think this is great. So I am in the business valuation field. I've been in the field since 1995. I'm not quite that young. I spent 10 years in the banking industry doing mortgage lending, mortgage risk management, and so forth. So I started in 95. I consider myself the accidental tourist. I was at a couple of banks that were sold, and after the sale, in both cases, because I was in the executive team, we got a piece of paper and said, you get to leave now, with fortunately a check. And I decided I really didn't want to go do that again if I could avoid going 2.5, 3 years without being sold. So I went to a big four firm and went to an event, and I said to the guy that was running the event, who had consulted to me in the mortgage business, when are you going to hire me? And he said, come in on Monday. And I went in on Monday and he hired me. And so I started in 95 in the mortgage area with them, and about 6 months into that, the person that was running the valuation practice said, would you like to come into valuation practice? And going back to 1995, that was sort of, what is valuation?
Okay.
Wasn't the same as it is today. So that's how I got started in valuation.
How big was the group you started with?
There was, at that time, around 20 folks, 20 partners, and around 200 people.
Okay.
So it was a good size practice at the time, probably one of the bigger size practices at that time.
Talk to me about your first year plus doing that. Like, what attracted you to valuation work? What attracted you to, just the project of valuation? Like, what was attractive about that too?
Well, I think that's why I kind of call myself the accidental tourist. I started in the mortgage side, and then when this partner came to me and said, would you like to be in the valuation practice, and explained to me what it was. And at that time, it was a lot of work in the tax space, doing tax valuations for companies restructuring. And actually, one of the first projects he put me on was to value a trade name of a company. And so that was my first time thinking about or hearing about intangible assets.
Okay.
And I'm going, how do you do that? What does that even mean? And so I learned relatively quickly the background around how to do that. And what became intriguing to me was it was always a different company, a different project, a different kind of project, valuing either a business or their intellectual property, technology, patents, got into all different facets of it. And I found that to be incredibly interesting. And really for the first time in my career, which would have been at that point, around 10 years into my career, was the time that I felt like I had found a place I wanted to be, and stayed there at that firm for 25 years.
Okay.
Retired from there, took an early retirement during COVID, and moved to where I'm at now at Anderson 2 years ago. It'll be my 2-year anniversary sometime early next month.
So tell me about Anderson. Tell me about the way Anderson is structured. Tell me about your role within that structure. Also tell me about the work you're doing at Anderson versus the other big four firm.
Sure. Let me go back to the other firm first. The other firm, being a big four firm, my clients were the biggest names out there, right? You'd think of a name, it's a Fortune 100 name, Fortune 100 type client. And we did a fair bit of repeat business. And I had one client in particular that I did several $1 million a year in fees with, which was a high number in the valuation space. But we would have different kinds of projects, different companies they were acquiring. The accounting rules came into play in 2004, which really changed the valuation practice, and our practice grew substantially, and to a point where in 2011 I was actually named national leader of that practice, which was, if not the first or second in the top 3 valuation firms in the country. And at that point, we grew to 80 some partners and managing directors and around 500 people.
It's impressive.
So I was doing all different kinds of projects, but very large clients. Coming to Anderson after my retirement, the company serves the middle market, smaller companies, middle market companies, and upper middle market. We can serve both private and public in the valuation space. Anderson started out as a tax firm,
Sure.
as a company called WTAS, which was started by some folks out of San Francisco when Arthur Andersen went under in 2002.
Sure.
And so the foundation is tax that really built the firm. And so private client services serving big names that we would all know, individuals and companies that we would all know, but serving them in the tax space, in the alternative investment fund space, M&A tax related work. So serving them in all those areas, there was a need for valuation.
Right.
And so what happened is they started a valuation practice really to serve that area. Then over time you sit back and you go, well, if we can do valuation, why don't we grow it and really go not just inside to support our internal company, and then let's go outside and build a valuation practice that serves all different kinds of companies, financial reporting, not just tax, so all different kinds of transactions as well.
And then what about the idea of hunters gatherers? Like in every business, there are people really good at hunting. There's people really good at gathering. You need both. So when you think about your practice, are you a little bit of both? And do you naturally hunt internally where things are being fed to you internally, or is it a mix of both? You're finding stuff inside and outside?
Yeah, no, I think again at where we're at here, we do have a large infrastructure internally that drives some of the business. But at the end of the day, I would say half my business comes from inside, and half comes from the work I'm doing outside to develop relationships with folks like yourself and others, lawyers that work with families and estates, and lawyers that are in the M&A space, M&A folks that do deals, investment bankers, PE firms, and the like, all different kinds of sort of contacts. So yeah, there's definitely a lot of hunting going on.
It's interesting, the business owners that I talk to, I can't tell you how often the start of the conversation is, something around, hey, my buddy has a business, it's fairly similar to mine, he's getting taken out, the multiples, whatever, 8 times EBITDA. I think I'm worth 10 because he's worth 8. But the reality is some people have no idea, what the valuation is. Why do you think people should have a regular valuation done or a fairly regular valuation done?
Well, I think there's a couple reasons. One, it's good for people to get a perspective. So to have a starting point. A lot of times when we work with clients and it's their first time getting a true valuation, they are surprised. And more often than not, they're surprised that it's not worth as much as they thought. And like anything else emotional to us, right? Our relationship is emotional to me, so it's very valuable. But the value of the company, it's their baby in a lot of cases. And so if we're talking about somebody who owns their company or it's been in their family, they have a sense of value, and they're going to always lean toward the higher end in multiples and so forth.
Sure.
So what we do is we give them perspective, and if we're any good at it, and this is something I think is very important that my experience over all these years that we do, is we help them understand why the numbers are what they are. So it's not just, hey, I need a value, give me a value, and they're disappointed, and that's it, right? Our job is to help them understand why we come to that conclusion, why that's the right place to think, right? I think we all know in valuation there's no one right number.
Of course.
I know one time for sure that I was absolutely correct on a valuation because I did a value of a company and 6 months later it sold for the exact number.
Well done.
But absent that kind of transaction, we don't really know because you don't really see that linkage. And then when you talk about people getting them updated, there's a variety of reasons that people might need them updated, right? For estate planning, for planning exits, for planning how the business is doing, how is the productivity of doing. They go on a big initiative to do a strategic implementation of some sort of initiative. What did that do for them, right? Now, it's easy to say, well, if it added $1 to earnings and we're an 8 multiple, it's worth $8 more.
Sure.
But over time, multiples change, discount rates change, a lot of the factors that go in, markets change, industries change. So it isn't as simple as saying, well, we have $1 more of earnings this year, so we must be worth whatever the multiple is of last year's valuation. So we think it's important for people to understand that, certainly if they're thinking about any kind of planning of any kind, doing a transaction with their shares or any portion of their business.
Right. I'm going to ask you a question, and I know the answer already. It's going to be depends. But there must be situations where you do the valuation work and somebody doesn't like the outcome. Now, I would guess sometimes, if it's, just the company that's looking for the valuation or a business owner, probably less of an issue. But if it's an outside third party and they need valuation to be at a certain level and you're not there, how do you deal with, what's the construct to deal with situations like that?
Well, we're always exactly the number people want, right? No, I mean that's a very important component of what we do and how we serve clients. The concept of telling somebody the value of their business and them coming back and say they think it should be higher. The issue doesn't start with, well, okay, we'll just make it higher.
Sure.
Right? It goes to what I said, is explaining why. And the part that you have to really be good at is also actively listening and understanding, because they might tell you something that you didn't get when you went through this process. And a lot of times, until you put the valuation in front of them, they can't picture or visualize the story that needs to be told. So when that happens, we will go back and we'll go through that with them. And if we learn something new, we'll modify our valuation. There's no pride in saying, this is my number and I'm going to not change it. But I will tell you, we certainly won't, if somebody thinks something should be, is worth 10, but they want us to say it's worth 1, that's a non-starter. But that's not what you're asking, right? I think you're saying, look, somebody thinks it's worth more or less or whatever, and we're different. We have to work through that with them and make sure at the end of the day, a very high percentage of the time we come to a meeting of the minds on the answer. It may move up a bit or down a bit, or it may not move at all, but we do it through this process of interacting and listening and learning more.
Outstanding. How about some recent examples of generic valuation work that you've done? Certainly I don't want you to give anything away in terms of who your clients are. Understand how sensitive that can be, but what about some of the variety of projects that you've worked on?
Sure, and that's what makes this business fun, right? There is a variety. So one of the ones that I recently did was a company who does work with one of their distributors, wanted to invest in their distributor. And so we were hired to value the distributor to help them determine what price to pay for their piece of the business and and help them essentially, which is stepping a little bit outside of the valuation realm, but having been in this business for near 30 years now, they also asked me to be part of the negotiation process with the seller of the interest. So that was a company that is in the food business. Not a very large company, but wanting to invest in a distributor. So there was an M&A real valuation component there, right? This was the way I kind of look at it. This is real money moving from pocket A to pocket B, from two parties, independent parties. Whereas another project that we just did was for an estate. And the estate was incredibly complex, multiple companies, multiple layers, different kinds of companies, LLC, corps, and so forth, partnerships, and all these pieces have to be put together in order for us to give them a value for the estate, in order for the estate to properly file the returns and so forth. So that's a different kind of valuation and a different use and a different need. And in that situation, there's a more prescriptive process that you have to make sure you take into consideration fair market value rules and regulations. But you still have a lot of opinion and a lot of data and information you need to do. So those two are examples of a couple that I've been working on recently.
Okay.
And there's a lot of examples, but the great part about it is there are so many different kinds of valuations and needs that it makes them all interesting.
Without a doubt. Which is going to lead to the question that's been burning in my head. What is the most unusual thing in all these years that you were asked to value? Anything that strikes you as so extraordinary that it's worth talking about here?
Sure. Well, there were probably two of them that I could talk about. One and one of them probably kept me up at night for a long time, and this was essentially a valuation of a swap, valuing the operating cash flows of a group of businesses, and this was a significant size instrument in the billions of dollars. And the concept was that there was a holding company, and they wanted the holding company to take on the risk of the earnings movement, and they wanted the operating companies to have less risk. And so by guaranteeing a certain floor and cap of the operating company's earnings and transferring that over to the holding company, we had to do a valuation of this swap of operations versus a fixed return for the businesses, or a fixed range of return. So it was a multi-country valuation. So I had the opportunity to talk to tax authorities in several different countries. And so that was a very big, very complex, hundreds of companies in that valuation.
Wow.
So very, very exciting one to do. And one other one that strikes me is a very large valuation of a royalty strip, where a company chose to take all of their IP royalties and transfer them under a strategy that they had. And this was a multi-billion-dollar valuation as well that also crossed over different countries, and ended up being one of the larger tax court cases in this country.
Interesting.
Fortunately, when they came to challenge the valuation and the tax authorities walked in, and there was me and I think 20 people from the tax authority, because this was a big deal, but I was the valuation person on the deal, so there was me and the client and counsel. I got to admit, I walked in, I was pretty nervous. And I think I was a partner for 5 years at the time, so it was a while back. And they asked me, question one, and I was able to answer it, and question two, and it wasn't so bad, and question three, it wasn't so bad. And by the time they were done, they took the valuation off the table, and that wasn't part of the litigation. And so that was a great success.
You are as competent as I thought you were.
You don't know for sure.
Impressive. What about art versus science? So the nature of valuation work, is it more art or more science?
I think the answer is it's both, but I think it becomes less art as you become more experienced. And what I mean by that, after you've done 1,000 valuations, or however many I've done, is it 10,000 or 5,000? I don't have an answer, but it's a lot. And you start to get a feel for what's reasonable, what's appropriate. And so what became art as you're learning it and you're being taught and you're trying to make adjustments that are qualitative. There's always qualitative adjustments in evaluation. It's almost unheard of to say, just take numbers and put them on a piece of paper. Otherwise, we have no value to bring to the table. So that judgment piece is arguably the art piece. And I think as you become more experienced, the art piece becomes less art and more quality of the knowledge that you bring to the table. And so when I talk to clients, my view is this experience that we bring to the table helps us get closer to a defensible valuation.
Sure.
If it's going to be an acquisition or if it's going to be with the tax authority, we want to win that fight. I want to stamp my hand on the table or pound my hand on the table and say, I'm going to win this. And we're going to, if it's challenged, bring it on. But it does bring judgment in, so that would be the art piece. But I think it just kind of collapses a little as you get more experience. But I will say this, there are valuations where you haven't seen something like that before,
of course,
even now, after all these years, and there's plenty of judgment that may go into that. So there's an art and science, no doubt.
What about AI? Everybody's being challenged nowadays to kind of defend their industry, defend their role within the industry. When you think about AI, any talk about AI and valuation work and what might happen?
It's interesting because when I was at the prior firm, I had started this concept of building a model that went out and looked into the internet, into the space, and really tried to evaluate and look at what would a comparable set be for a company. right? And, in our work, we look at things like, what's the industry? So let's get the same industry and then break it down. Are they a distributor or manufacturer, and break it down further? And there's a lot of, our own judgment going into the selection of these comparable companies. And so I had started thinking about the concept of, well, let's go out and have it do very, analytical analysis of what a comp set might look like. Where's the correlation the highest? What, a lot of things that maybe are more data driven to theoretically get to a better answer, or less art, more science.
Sure.
That hasn't come entirely to the industry yet. There are valuation programs out there that can do evaluation. They're not any good, in my opinion. You still need the people side of things, but there's little doubt in my mind AI is coming to the industry in the form of looking for comp sets, looking for data for us to use, helping evaluate discount rates, being able to look at the industry and provide more data to our valuation. So it hasn't hit this industry yet the same way it's hit a number of others. But it will, and I'm looking forward to it. I think it'll be very interesting.
So as you know, people like to work with people they like. There's got to be more behind Jordan Lamm than just valuation work. What would the people closest to you say makes you tick? What do you like outside of work?
Well, I think although I'm not very good at it, I love golfing.
Okay.
I'm not going to put my handicap out there, but I do enjoy that. I do that at least once a week on Saturdays with a bunch of friends, and try to get out as much as possible. I also am a bit of a car freak, and I like to take my car on a racetrack.
Okay.
And I've been doing that for several years, and have been fortunate. I don't race, but I drive as fast as I can around. There may be 20 cars out there with me. So I do like the speed and I find that when I'm on the track in the car, there's little place else in the world where I can let go of everything around me, because if I don't, I'm hitting a wall.
Yeah, you are.
Right? Or I'm spinning out. And so you're really focused, and it's a good adrenaline rush. So I like that kind of thing. Those are probably two of my favorite things, other than, of course, I've got a 26-year-old son and my wife, and my wife and I are going to be traveling soon for her birthday. I won't say which one it is, but we're going to be going to Greece, and so we'd like to travel as well.
All right, Jordan, I've held this one in my pocket for a while here, and I've got to know. So this past weekend, something epic happened.
Yes,
Late night
did.
Saturday, I'm watching the Notre Dame NIU football game, and actually got my wife to watch football, which never happens, and she was as into the game as I was. How the heck did you feel when NIU upset Notre Dame this past weekend?
Yeah, words can't describe it, right? I mean, you don't expect it, and it was a great game. It was a lot of fun to watch. It kind of brings me back, not to age myself too much, but when I was at NIU, we went to the California Bowl. So, I have fond memories of that, and then we had some good years in between, but I don't think we've ever won a game that would stand to that game. So very excited about it, and really, honestly, an emotional win. I even talked to some of the people from NIU for a long time, and we've been talking to each other all the time now, and actually been talking to a lot of my Notre Dame friends as well.
Consoling them, no doubt.
Yes.
Okay, any other questions before we wrap up here?
Yeah, I think one thing that would be great is, so you recently came over to Alex Brown, and we've connected and talked about how we might be able to work together, but can you tell me a little bit more about how you think about your network and building your network, beyond just valuation, but as well?
Great question. First of all, the move to Alex Brown about 2 months ago, when I looked around and I was building a practice that was really business owner and executive centric, I recognized what I thought was the best platform on the street for, expressing that practice and building a practice and building a team to serve the clients that I have and will have. And so, about 2 years ago, I got my certified exit planning advisor accreditation, and with that, really bought into the principles that Exit Planning Institute is espousing on us. And, a huge part of it is not only identifying an opportunity, but when an opportunity is identified, to bring in the right people. And one of the arts to that process is not only having the right people to grab in your network, but also to know when to introduce them into a relationship. You know, if you engage with a business owner and bring 7 people, to a relationship immediately, it's going to be overwhelming, and the business owner's not going to know why all those people are there. So I think as quarterback of those relationships, bringing people in at the right time, and of course, having the right contacts, like you, is important to me. Thank you for asking.
Yeah, I appreciate that. I think that's helpful. And I want to thank you for having me here today and spending the time with me and letting me tell a little bit about my story as well. So thanks very much.
Thank you.
Appreciate it.